Hello and welcome back to Nordic Case, where we discuss different stocks and where I give my opinions on them. This is not an investment advice, and this is merely my opinions on the stock. Today we're going to be discussing Evolution Gaming, a Swedish gambling service provider. Evolution has had quite a growth story with a lot of ups, but recently also some big downs. Since its listing in March 2025, 10 years ago, the stock is up about 4,500%. However, during the last couple of years, the stock has not been doing quite so well. Since its peak in 2021, the stock is down 50%. Could this be a great time to buy the stock, and what's going on? Find out more in this video. Before anything else, if you like this type of content, please like and subscribe. It would mean a lot. Evolution is traded on the Nasdaq Stockholm, Sweden. It's one of Sweden's biggest companies with a market cap of $16 billion, or 179 billion Swedish krona, and a share price of 831.8 kronor, or $79.26. What does Evolution do? Evolution is an online gambling service provider and produces different games with the help of its subsidiaries NetNet, Red Tiger, Big Time Gaming, Esugi, and Anomaly City. And they all create different games. You can see them on screen now. Through the acquisitions that Evolution has made of these companies, Evolution has been able to develop a full catalog of different games in all of the different categories, such as RNG games, live shows, and more traditional games like Baccarat and Blackjack. The global casino market, which Evolution of course operates in, was as of 2023 made up of 78% land-based casinos, 17% RNG games, and 5% live shows. Evolution has chosen to focus on the last two categories, RNG and live shows. This has proven to be a huge success, considering that live shows has grown by 23.9% per year, and RNG games have been growing at 20.8% per year, compared to the land-based casinos growth of only 0.3% per year between 2019 and 2023. Evolution operates a B2B business. This basically means that they don't operate their own casinos. They instead license their games to other operators. They then get a fixed fee from these operators and a variable income depending on the profitability of the game. The casinos also have the option to create dedicated tables, environments, and hire native-speaking dealers, and much more. When a company acquires a license from Evolution Gaming, they get access to the OSS, or the one-stop shop. This is a system created by Evolution to enable its customers to easily integrate with Evolution and its subsidiaries. This has helped Evo take its system reliability to 99.93% in 2023, which is crucial for success in the casino market, since players usually leave really quickly if they're not satisfied. Evolution is currently working with around 800 companies worldwide, such as Leo Vegas, DraftKings, PokerStars, Swedish Games, and so on. However, one important detail to take note of here is that the top 5 biggest customers create 41% of Evolution's revenue in 2023. However, this might not be as big of a problem as you might think. This is because Evolution's moat is very strong, making it difficult for Evolution's partners to leave. This is because Evolution is the industry leader within the production of online games and have some of the most popular games, such as Lightning and Crazy Time, which is ranked as the #1 online game show. Thus, leaving Evolution would both incur player losses due to them losing access to their favorite games, and any potential VIP tables, branded tables, and any native-speaking dealers that they would have specifically hired for that operator. They would also lose out on the opportunity to have Evolution's new games on their platform. In the end-of-year report, in 2024, they announced that this will be the biggest year in the company's history when it comes to game releases. with at least 110 new games scheduled for 2025, and also really, really big ones that they have been working on for a long time. They would also have to recreate the OSS and try to reach similar reliability, which is extremely difficult and something Evolution have been working on for a really, really long time to try to perfect. There have been companies that have tried to compete, such as Pragmatic, but they have not been able to dethrone Evolution as of yet, and doesn't seem like they will anytime soon either. Evolution also has an incredible balance sheet with around 800 million euros in cash while having no debt whatsoever, as you can see on screen. Evolution has also managed to profit 1.25 billion euros, resulting in a 16% growth from last year, and its revenue can be seen growing by 23% to 2 billion euros. They've also managed to reach an EBITDA margin of 68.4% and a return on invested capital of 36.1%, giving them great margins and good growth. Due to their amazing balance sheet, Evolution has for 2025 proposed a dividend of 2.80 euros a share, following their dividend policy of 50% or more, which equates to a dividend ratio of 3.8%. On top of that, the board intends to repurchase shares up to 500 million euros, which at the current price would be about 2.8% of the company. They have also stated that they might increase buybacks at future meetings. These 3.8% in dividend yield and the 2.8% in share buyback yield alone means that Evolution will return 6.6% to shareholders this year alone. But where does all of this money come from? Evolution's biggest markets are in Europe and Asia, with both of them making up about 37% each of Evolution's total revenue. Europe can be seen growing at 8.5% year over year, and Asia growing 11.6% year over year. However, if you compare Asia's growth in Q3 to its Q4 growth, we can see a quarter growth of 0%. This can be explained by cyber attacks against Evolution streams, which basically means that they are stealing the streams. This means we will most likely not see too much growth from Asia. However, for a few North America, which makes up 13% which has in the past been Evolution's fastest growing region, after a lot of investments, finally begun to grow with a growth rate of almost 20% year over year. This is only expected to continue with the legalization of online gambling in more of the states in the United States. Evolution is also working on more games catering to the American market. Latin America is also growing at a rate of 24.7% year over year, and this growth is also only projected to accelerate with Brazil legalizing gambling. Online gambling, of course. We can also see that if we look at the bottom of the screen, that only 41% of Evolution's revenue comes from regulated markets, and thereby we can deduce that 59% is coming from unregulated markets. An unregulated market means that there are no laws about online gambling yet. This is, in and of itself, not a problem. However, once regulations starts being created, this can lead to regulatory problems. But Evo has, at least in the past, been very good at dealing with these changes, and has even helped them increase market shares and compete. The downside of this is that it usually means more taxes, which lowers margins, but overall is not a bad thing for Evolution and us investors, since it does mean that the money they do earn will not be taken away as long as they follow the rules and regulations. Speaking about rules and regulations, Evolution has recently landed in some hot water with the UK gambling commissions for having their games accessible in the UK on unlicensed operator sites. To prevent this from happening in the future, Evolution has heavily invested in security to prevent people in the UK from accessing Evolution games on unlicensed operators outside of the UK. These changes have also been implemented in other regulated markets to prevent this from being a problem in the future. The risk of this investigation, if found guilty, is being fined or them losing their license to operate. In a previous case, where 888 Holding plc was found guilty, their fine was only 9.5 million British pounds. This, however, seems to depend on how much money was earned through their unlicensed operations. Even if Evo does lose their license, the UK only accounts for 3% of their revenue. So even if they lost their license, this would not be the end of the world. However, this would definitely spark investigations in other countries, and it could mean risk losing their licenses there as well. Evolution also decided to delay informing the markets of this investigation. However, and this has led to an investigation by the Swedish Finance Inspection. What the consequences of this inspection might be is still highly uncertain. However, it is worth noting that the chief of investor relations left the company shortly after, and he is also the one that's being said took the decisions to delay the information. According to analysts, Evolution is projected to grow their earnings by 6.5% and the revenue by 8.5% in 2025. However, this does not include the share buyback yield of 2.8%. If you add the buyback yield to the earnings growth, we get an EPS growth of 9.3%. Okay, so now you guys should be able to see my intrinsic value formula calculation template. Here, I have estimated on the normal case, like about what you would expect. I would expect a 7% growth with a dividend rate of about 5%, which gives us a terminal multiple of 20%. The discount rate is basically how much money I expect to earn per year that I am invested. And to me, I think 12% is pretty good because even if it only gives 10% returns, I'm still fine with that. But I do want to overperform the market in the long term, which is why I'm aiming for 12% per year. I'm expecting a 7% growth compared to the analysts expecting a 9.3% growth per share in earnings, I believe is what I said. This is primarily due to the slowdown in Asia, any potential regulatory problems. I think the growth will slightly slow down in the coming few years, and that the market will demand a terminal multiple of 20%, aka 5% dividend rate, since Evolution is not an ESG business and therefore has been quite hated on by the market recently. However, things might turn out a lot better with the accelerating growth in North America and LATAM, and hopefully Evolution being able to figure out the problems in Asia. I think in the best case scenario, we're going to be looking at an 11% earnings growth rate per share over the next coming 5 years, and an 8% for the 5 years after that. In this case, I'm assuming that the market is going to be a bit more happy with Evolution and therefore only demand a 3% dividend rate, which I still think personally is very high. But since I'm probably going to want to sell it eventually, I'm still going to try to think as I believe the market is thinking. So what we're looking for here is fixing the problems in Asia, increased growth there, continued growth in North America, continued growth in Latin America, and very few regulatory problems. In the third scenario, the worst case scenario, now we're talking really, really, really bad. I am estimating a 3% growth for the next 10 years. This, personally, I don't think is very likely, but it's better to be safe than sorry. And in value investing, which is which is what I try to do, the number one principle is don't lose money. And so I've tried to put it as low as I can possibly reason it to, which is 3% per year, and a terminal multiple of 15%, which I would believe, if I don't remember correctly, is a dividend rate of 7-8%. I've put the probabilities of this happening to 50% for the normal case scenario, 15% for the best case scenario, although I personally believe it's a lot higher. I still like to try to think pessimistically, since in that way I will be prepared, or more prepared, if anything bad happens. And the worst case scenario I put up all the way to 35%. But me personally, I believe still it's a lot lower than that, probably more like 10%, to be honest. But rather safe than sorry. Despite all of this, and demanding a 12% yield per year for over 10 years, the intrinsic value of Evolution is 974 kroner per share. Which means I personally think this is a strong buy, despite all Evolution's flaws. It still has a great market position. It has a lot of games coming out. They have a lot of potential to increase their growth. So for me, this stock is definitely a buy. But of course, do your own research. Don't just trust me. I can't get into every small detail of Evolution during this video. So, and just to reiterate, as long as you buy it under 974 kroner, Swedish krona per share, I personally would say it's a buy. And I am buying, so I do have a long-term position in Evolution, just to be clear. And I would highly recommend you to do some research into this very fascinating company. I have also created a portfolio where we will be tracking the progress of the companies that I have recommended, maybe share some updates, and just to see how it goes. I will be putting in 2,000 fake dollars or 1,000 fake dollars in every one of these companies, and I will buy them at the share price that there was when I posted the video, to show you guys how it's going. And every once in a while I will post a video where I tell you about it. So hopefully you guys are going to enjoy that too. Thank you guys so much for watching this video. Again, if you enjoyed, please like and subscribe. If you have any questions or suggestions on how to improve the content, or what companies I should cover in the future, please leave them down below in the comments, and I really appreciate it. Thank you guys very much, and I will see you guys later.